Hello, this is Kryptonite channel, and in this video I'm gonna talk about how big whales play in the crypto market and why the market changes its trend from rising or bullish to falling or bearish. Let's start from psychology. Let's just imagine you are a big whale and you've got a lot of money, and now you want to do what? That's right, you want to increase it, save it, and not lose it. And here comes the psychology. What big whales do to manipulate the market. You have to understand one simple thing. For someone to earn money, someone has to lose money. That's why they have to always attract newcomers to the crypto market who will be buying, believing, and investing their own hard earned money. And here comes the manipulation. I would say the market can be in one of the three phases: uptrend, stoppage, and downtrend. And this is exactly what the psychology of the market is based on. Let's start from understanding of why the market is rising. Very simple, here comes the greed. At the time there are lots of positive information in the news and crypto public. The newcomers become greedy and their brain does not function properly. They simply start doing what they are being told. And when I talk about positive news, I mean the news such as Bitcoin is going to reach 100k, another country accepts Bitcoin as legal currency, or cryptocurrencies is the near future. The higher the price of the crypto asset rises, the more positive news you hear about it. They try to persuade you that here you can get 20, 50, 100x, and without this asset you will not survive. They switch on greed inside you. In such moments, they create the atmosphere of bright future, massive gains, and soon the Bitcoin will reach 100k. But is that true? Is Bitcoin gonna cost 100k, and when? To answer this question, we have to understand where the big whales hide. The main massive purchases of Bitcoin were made at 10, 11, 12, and 20k levels. Approximately at these levels, big whales entered the market and switched on a beautiful marketing to attract the newcomers. Let's get back to where you imagine you are a big whale and you entered the market at 10k per Bitcoin. If Bitcoin reaches 50k, you've already made 5x. And don't forget that big whales play with millions and even billions. And when you make 5x, that's a massive increase. And when you get such an increase, you have to do what? Exactly, you need to take your profit. But for a big whale to exit the market, there should be a massive demand so they could sell. And here we're talking about billions of dollars. Again, to create such a massive demand, a beautiful marketing comes into play. 100k per Bitcoin, all YouTube bloggers keep telling you to buy Bitcoin. And that's where the big whale starts his exiting strategy. Always remember, if you invested a lot of money, you have to keep exiting the market while it's growing. And by the time the Bitcoin reaches 50k level, a big whale already took his profit, and there is only one thing left to do: push the price slightly up and sell his remaining Bitcoins. Again, big whales never sell their assets fully. They leave a portion of their crypto assets so they could do what? Exactly, to change the market trend from uptrend to downtrend. If you ever saw a chart, then most likely you saw the following. The price is going up, then there is a quick drop, and then the price keeps going up again. This is nothing but a play of a big whale. What happens in this moment to achieve that long red candle? You need to liquidate traders who are in a long position. How does it work? Very simple. If you know how centralized exchanges work, you know that exchanges have access to a source of information that no one has. They know exactly how many long positions there are, whether they use leverage or not, if so, how big, and also they know where their stop losses are. When you possess such information, you can create that long, red, beautiful candle, and liquidate the ones who are in a long position with a margin call. And when you create that long red beautiful candle, you can do what? Exactly. You can re-enter the market and buy Bitcoin at a price way cheaper than you sold it at. Let's remember May of 2021, where Bitcoin fell from approximately 60k to 30k in a matter of a few days. That's where big whales re-entered the market. Again, to understand what happened in May, you have to understand what a long position is. Let's just imagine the price per Bitcoin is 60k and there is a trader with a leverage, let's say 10 to 1, because he truly believes in 100k per Bitcoin. When a trader opens his long position in around 60k per Bitcoin, we know exactly where his margin call is. And the only thing a big whale needs to do is slightly lower the price of Bitcoin, and then everything happens automatically. A long red candle will push the price down and we get a cascade of liquidations. When you see such a picture, that's where you start seeing bad news, such as someone hacked some exchange and users lost their money. But is that the truth? Can we check it? Yes, we can see transactions on blockchain, but who made that transaction? We don't know. Going back to bad news, China banned something, Securities and Exchange Commission is not happy with something, and the whole world is against cryptocurrencies as it's bad for ecology. There is nothing better than spreading bad news that you cannot check. Again, exchanges get a full access to who entered the market, at what price, and where their stop losses are. Knowing such data, you can play the following scenario. Let's imagine 50k per Bitcoin is where the cascade of liquidations starts. A big whale starts selling his remaining Bitcoins in several red candles in the way so it touches 50k level, goes below it, and then the scenario plays itself automatically. Why big whales do that? Very simple. They exited the market at all-time high and now they need to lower the price so they could re-enter. And let's agree to raise the price per Bitcoin from 60k level to 120k level is much harder than to lower it from 60k level to 30k level and then raise it back to 60k level. In both scenarios, the profit is the same, 2x. I hope you got some useful information from this video. If so, be smarter and try not to lose your money.